All right. What's up, Tycoon? Super excited for today's video. We are going to go over my favorite thing in the stock market, and it is gaps on the daily chart. Okay. Now, historically, gaps tend to fill about 90 to 95% of the time. All right. And what happens is you have gaps up that will fill in a bull market cycle. Okay. And you have gaps down that will fill in a bear market cycle. All right. Now, if you're wondering what I mean by this, we're taking a look at ticker symbol FB. Okay. Formerly Facebook. This is now Meta Platforms. And I'm just going to give you guys an example of the gaps that I'm speaking of and just show you visually, okay, that they do fill and that this is correct. All right. There's various stocks you can go across throughout the entire market. And these gaps pretty much always fill about 90 to 95% of the time, with exceptions, being a stock getting delisted, right? Let's say a stock has a big gap up and it just ends up keep going down, goes bankrupt, or gets delisted or something like that, right? But for most major companies and well-established companies, it's very good and very useful and will help give you a lot of insight. Okay, so we can zoom in right here. Okay, and this is a great example of a gap being filled in a short time frame. Okay, because if we know that gaps are going to fill 90 to 95% of the time, what we need to do is we need to come in here and we need to set alerts. All right. And be prepared for it. All right. So what you can do is you can come in here, right click, hit create alert towards the bottom of a gap. Right. And so when you'll get an alert when it's at or above, and you can put in here filling gap. Okay. And you'll get an alert straight to your phone, and you'll be instantly, notified. Oh, hey, well, we're trying to fill the gap right now. It's trying to fill the gap. Maybe this is a good day trade opportunity for me to catch that momentum up, because I know that gap is going to fill 90 to 95% of the time, and we're really close to the gap. So there's a higher chance of the gap filling, right? It's not 100%, so you always have to keep that in mind. There's always going to be risk anytime you're looking to make a trade in the stock market. But if you position yourself and set alerts, then you can understand. And also when there's market crashes, you can come in and you can see and you can kind of understand, well, why did it just drop right to that price level? Why does it hit that price level? Well, now as a trader, you can actually understand why. Well, maybe there was a gap to fill at this price level and we just needed to come back and fill this gap, right? So this is one example of a gap. Okay, I've colored it in a bright blue box so you guys can see it. There's a gap in between the bottom of this candlestick and the top of this candlestick in the next day. Okay, here's another one. A gap between this candlestick and a gap between this candlestick. All right. And what do you know? Within a few trading days, we come back down and we fill this gap. Okay. So, those are two examples of a gap filling. All right. Meta Platforms, ticker symbol FB, has this monster huge gap right here up to fill. Okay. Because we dropped down on earnings and we fell into this gap. Okay. So, a lot of people wondered, like, you gotta ask yourself the question, if Facebook is trading at 316, right? Why does it drop all of a sudden down to 234? Like, why that price, right? That's something that I've always wondered. And, it's like, hey, how did they determine where these prices are going to go? Well, if we go back in time, we can look and we can see that there was a very big gap, okay, right here for Facebook to fill. Okay. And this was in the past. This was like 2 years ago. Okay. So, it came down, it started to fill that gap, but we didn't come all the way down. Well, look at where the bottom of the gap is at 235. Okay. This price level right here. When Facebook crashed on earnings, I had so many alerts going off, right? Because I had alerts, for the gap down, because I was ready. I wanted to be prepared. I wanted to invest in Facebook, and I didn't want to buy Facebook when Facebook was trading, at all-time highs and when it was very bullish. I wanted to wait for a correction. So that's why I'm showing you guys this strategy. Is if there's gaps down on certain stocks, what you can do is you can be patient. You don't have to rush into things, right? A lot of people, they can't afford to just buy 100. It's at right now, it's at 198. That's a much better price, and so that's what I was waiting for. That's what I was, particularly looking for on Facebook. And I had lots of alerts going off as we fell down and it ended up hitting those price levels. Okay. So we can go back and we can see it's still filling even more gaps down. So we're wondering like, well, why did Facebook one day dip all the way down to 173? Well, the reason being is we had a gap down to fill. Okay. We can go back and we can look at it in time, and we can look on the chart. Okay. And anybody can do this, and you can go and you can see, all right, hey, well, there's a gap down to fill right at these levels. So we'll chart this up, we'll set some alerts. And now all of those gaps down that we had to fill on Facebook or Meta platforms, ticker symbol FB, they're filled. They've all filled. Okay. So now I can take this off my board. It's no longer a threat to me, right? It's no longer something that I have to be worried about because Facebook has already filled this gap. So now I'm looking at it, I'm like, okay, hey, well, now I got that discount. Everybody is always saying, oh, I wish I could, when the stock market's raging, they're like, oh, I wish I could have got it at this price. I wish I could have got it at this price. We're at prices that we have not seen for most major stocks in over a year, 2 years, some even 3 years, right? They're falling down to levels we haven't tested in 3 years. So, you basically just got a major discount. And if you were willing to buy stuff in the bull market cycle when everything was going up and up only, you should, be more excited to buy these because when you're buying a stock, you're buying ownership of a company, right? Why would you not want to own that company at a lower price? Unless something has changed fundamentally about the company, or you've changed your position on the company, you don't really, there's something has changed, right? Your views have changed. But if you're still as bullish on the company, now is the time with a lot of stocks for you to look to start adding a position, right? So I'll go ahead and update this drawing too live for you guys, and we'll just show some more. All right. So if we look right in through here, we had a couple gaps. Okay. So we gapped up on this day and it filled right after that. So this is another example of a gap filling. All right. And then on this day right here, there's a very big gap. Okay. And we still have about this much left to fill. Let's see here. Right. Because okay, so this is a good learning point too. All right, so you see how I just shrunk that box? All right, that's because our initial gap was all the way up to here. Those parts have been filled. So what you have to do is you have to adjust it to what has not been filled yet, right? So we've come down, but we still haven't filled this part. There's still a gap on the chart from this area. So now this is the main area of interest, right? And so what I'm going to do is I'm going to set an alert right above at the support level above, and I'm going to get an alert now when we're at or below. I'm going to say approaching gap. All right. So, that's kind of like the whole basis of this video, is to help you guys out, and learn about gaps. Gaps are very, very useful. And it's one of my favorite things that I discovered in the stock market. They're pretty fun. And when you look at stuff and you understand market sentiment, and okay, well, yeah, there's a huge gap up to $314. So Facebook is going to most likely fill that. There's a 90% chance. Is it going to be anytime soon? Right? Is there anything giving me signs that I could get Facebook at a cheaper price to hold it till it eventually reaches back up to that 314 level? Right now, it may take 2 years, it may take 3 years, 4 years, 5 years. You don't know. But what you can do is if we're looking at it, right, a lot of these gaps down, they were from the run of the bull market. So you have the run of the bull market, and it's creating all these gaps down to fill. And then now we're in a bearish market, and we're getting all of those gaps down filled, right? So the next time we'll see these fill is when we're in a bull market cycle and Facebook is trying to get back to all-time highs. But I can't predict when that's going to happen. I can't predict if that's 100% going to happen, right? But using technical analysis, we can say that it's about 90% accurate, that it will fill. It's just a matter of when, right? You just can't predict when. So, you have to be prepared to hold through the pain if you want to, see the gain, right? So thank you guys for watching, and don't forget to like, comment, and subscribe.